Good evening, everybody. Thanks for joining us yet again. This week, what I want to do is take a look at Fibonacci extensions, which are similar to Fibonacci retracements, but they allow us to monitor where support and resistance levels are actually developing when the markets break to new highs or new lows, depending on the market trend. So just basically to just recap on what Fibonacci retracements are. They're a measure of potential recovery within a downtrend or a correction within an uptrend. And they highlight areas where support or resistance can develop to resume the original trend, or if we start to see these levels broken, trigger moves towards the next retracement levels. Now, the important retracement points that we monitor within technical analysis when we look at Fibonacci retracements are set retracement points, percentage moves of price where we expect support or resistance to begin to materialize. And the retracements are 38.2, a 50% level or the midpoint, and a 61.8% level. Now, on various charting systems, you will see quite a few percentage retracements available, but these are the three that I would suggest that you use. The others you can ignore. They're for other aspects within technical analysis, but it's really the 38%, the 50%, and the 62% retracements that we're highlighting when we speak about Fibonacci. And you take a significant high or low and draw these percentage retracements from the significant low or high, depending in direction of the price move. And these give us the support or resistance levels that we monitor and highlight where potential turning points or breaks and acceleration trigger points are likely to be seen. Now, when we come to Fibonacci extensions, we use these when the market breaks to a new all-time high or low, and because at that point, we're really asking where the next support or resistance levels are likely to be. Effectively, we're in uncharted territory. So we haven't got previous highs or lows that we can monitor that act as the support or resistance levels. Now, we can use channel upper or lower extremes, Bollinger Bands, trend lines to highlight where the next support resistance levels are likely to be encountered. However, when these aren't available, it's when we use Fibonacci extensions to highlight the potential support or resistance levels. Now, we use exactly the same ratios or the percentage levels that we do with the retracements, 38.2, 50%, and 61.8%, but we project them higher or lower depending on the direction of the market break. So let's take a look at the USA 500 index on a weekly basis, looking at the February-March sell-off in 2020. And the market sold off aggressively, and we started to rally sharply, and we then saw new highs posted. And it's this point that we're then looking for next support or resistance levels within this positive trending condition, which may not be readily available because obviously we're trading in uncharted territory. We haven't got physical support or resistance levels evident once we break to new extremes. So let's just take a step back a little bit and look at this same sell-off and highlight the significant high and the significant low, the high posted in February 2020, the low in March 2020. So we take these levels, and for Fibonacci extensions, we calculate exactly the same percentage levels, but we project them from the significant high. So we take the entire sell-off, calculate 38% of that sell-off, and project it from the February 2020 high. That gives us a level at 37.89. We then do the same for a 62% level at 40.77 and the 100% level at 45.39. So these give us potential resistance points within the current advance of price action. Now, as the market then breaks to new highs, we have this as a focus level, as a potential resistance and possible failure point, where we would need to monitor price action more closely to highlight the potential turning points within the current price action. Now, as it happened, we found resistance for a short period of time at this 38% extension level, but then started to see a break to the upside. Once we start to see that price activity, the projection of price potential is towards the 62% extension of 4077. That acted as a short-term resistance level, but didn't see any sort of reversal in sentiment, and further support materialized to produce a successful upside closing break above the 62% extension level, which in time then opens the door towards the 100% extension of 4539. So each time we break through an extension point, we have an idea of where the potential next resistance level is set to be. So if we're looking to take profits on long positions, for instance, we may well view an extension as a potential resistance area to see how the market trades and reacts around that level, and whether or not we should take profits, perhaps even reverse the position, or if we start to break above an extension point, look to resume the long position because the market is set to push higher. So extension levels gives us an idea of where the possible resistance levels within an uptrend are likely to be, and support levels within a downtrend. Now we're looking at the weekly chart of the US 500 index here. Now, what we can do is to also look at this on a daily basis. So what I want to do now is to take a look and zoom in on this blue squared area on a daily basis, and actually see how Fibonacci extensions acted and behaved within that type of price action. So this is that correction that we saw within the blue box earlier, but this is on a daily basis. So we're looking at a shorter term perspective. We have the significant high posted on September the 3rd and the significant low posted on October the 1st, that we can then, if we start to break to new highs, project the extension levels with the set percentage points to look for possible resistance areas and possible failure levels within the current advance of upside movements. So the 38% projection, an extension level comes in at 4618, and this is 38% of this sell-off projected from the significant high. So we have that as a potential resistance focus. We then have the 62% level at 4685, and the 100% extension level, so the entire sell-off projected upwards from the significant high that we're measuring from at 4782. And we can do exactly the same thing and look for, with the market trading in new all-time highs, to project the market and highlight the potential resistance levels. But if we do start to break these extension points, the potential and the risk is that we would then move towards the next extension point. So when we started to see around in early November a close above the 38% extension point, we would have the 62% extension at 4685 in mind as the next possible resistance area, even though we're trading within uncharted territory and making new all-time highs. That point actually didn't turn out to be a significant resistance, and we managed to close above that on the first day that we tested it and continued to see further support materializing the next session. So we can confirm that we've seen a consistent close above this extension, the 62% extension level, which in turn leads us to then look towards the 100% extension of 4782. So again, having broken this important resistance level, we now have an idea by using the Fibonacci retracement percentage levels that we look at, but projecting upwards, of where possible resistance areas are likely to be. We then see the market enter into a choppy period, but with still having in mind the 4782 level being the 100% extension of this sell-off as a potential resistance area. Price action develops and consistently finds resistance from this point, and we fail to close above it for a consistent period of time. So we're using this area as a resistance point, and we need to see how the market defends this level and whether or not we start to see a more serious failure and rejection from it. We then see a significant sell-off. We break below the retracement points that we would run on this upside move. So again, using exactly the same percentage, but in this term, a retracement, so 38%, 62%, and 100%. And once we start to break below these points, we then highlight deterioration, having failed at this important Fibonacci extension resistance, and that creates the risk and develops into a more serious failure. So Fibonacci extensions allow us to highlight important support or resistance levels whenever we're trading in uncharted territory, when there isn't an obvious support or resistance level that we need to monitor. It allows us to highlight the potential increase in two-way activity to either take profits on longs or shorts, depending on the direction of the trend, or just to monitor when, if we start to break above or below those levels, the potential turns towards a more extended phase of acceleration to develop the original direction of the trend. So they can be very useful in just highlighting support or resistance levels that may not be obvious within price action, just looking at a daily or weekly chart. So thanks very much. That's me for the next couple of weeks. I hope you'll join us again when we'll look at another technical indicator then. Thank you.